Could Pi Coin be heading for another major crash this month? After already plummeting over 80% from its yearly high, Pi Network's native token is now at serious risk of falling another 25%. And it all comes down to a mix of alarming technical patterns and a flood of new tokens entering circulation. If you're holding Pi, or even just watching the project closely, you'll definitely want to stick around for this one. Let's break down what's happening behind the scenes, from the technical indicators to the token unlock schedule and what this could mean for Pi's price in the short term and beyond. Let's start with the chart, because right now, the technicals are telling a clear story, and unfortunately, it's not a bullish one. Pi Coin has officially broken down from a classic bearish structure known as a rising wedge pattern. If you're not familiar with that, it's a setup where the price moves upward between two converging trend lines. While it may look bullish at first glance, this pattern usually signals weakening buying pressure. More often than not, it ends with a breakdown below the lower trend line. And that's exactly what we're seeing. As of April 17th, the PI/USDT pair has entered the breakdown phase, and based on the measured move from the wedge's height, the projected downside target is somewhere between 44 and 45 cents. That's roughly 25% lower than where the token is currently trading. Now, some traders might look at the Relative Strength Index, or RSI, which is sitting near 32, and say we're approaching oversold conditions. And they'd be right. But here's the catch, a low RSI doesn't automatically mean a reversal is coming. It just shows that bearish momentum is strong. In situations like this, the price can stay oversold for a while before any meaningful bounce happens. Another red flag is the 200-period exponential moving average on the 4-hour chart. This moving average is widely used to gauge the dominant trend. Right now, it's hovering up near 87 cents, far above the current market price. That massive gap reinforces the idea that the bears are in control. Unless Pi can reclaim this level and hold it as support, the overall structure remains decisively bearish. So the technicals aren't looking great. But if that wasn't enough, there's another major factor adding fuel to the fire: massive token unlocks happening throughout the month. In April alone, Pi Network is releasing over 108 million PI tokens into circulation. And this isn't happening in one lump sum, it's a daily event. On April 16th, about 2.8 million tokens were unlocked. Then starting April 20th and continuing daily, we're looking at between 5 and 6 million new tokens being released each day. Just to give you an idea, here are a few examples. April 20th will see 5.74 million tokens unlocked. The next day, April 21st, another 5.14 million. Then April 22nd? 5.91 million more. These are consistent, daily inflows of new supply entering the market at a time when there's already low momentum and declining prices. Now, in a healthy, balanced ecosystem, token unlocks can be managed well, especially if there's growing demand or new utility to soak up that supply. But with Pi Coin, we're not seeing strong enough demand right now to match the pace of these unlocks. That imbalance could easily accelerate the price drop that's already underway. But it gets even more serious when you zoom out. These April unlocks are part of a much larger, long-term distribution plan. Over the next 12 months, Pi Network is expected to unlock and release more than 1.56 billion tokens into circulation. That's an average of about 134 million tokens every single month. And it doesn't stop there. The biggest unlock event on the schedule is set for December 2027, when over 432 million tokens will be released in just 1 month. That kind of long-term inflation has the potential to suppress price growth for years unless it's countered by major adoption milestones, token burns, or ecosystem expansion. So with all of this happening, the obvious question is there any chance for a reversal? Can Pi Coin recover from this bearish setup? Technically, yes. But it's going to take some work. For Pi to flip bullish again in the short term, a few key things would need to happen. First, the price would need to reclaim the 200 EMA on the 4-hour chart and hold above it. That would show that the trend is shifting. Second, we'd need to see a strong increase in trading volume, especially during or right after these token unlock days. That would indicate buyer interest is returning. And third, there would need to be some kind of strong external catalyst, maybe a new exchange listing, real-world adoption announcement, or a sudden increase in merchant utility that gives people more reasons to use and hold PI instead of selling it. Without those drivers, though, the path of least resistance still points downward, at least for now. The charts, the supply data, and the current lack of demand all suggest that Picoin could be heading toward that 44 to 45 cent region unless something changes fast. So, should you be worried? Well, if you're a long-term believer in Pi Network's vision, this could simply be a painful but necessary phase in the token's evolution. But if you're trading in the short term or speculating, it's critical to understand the risks. Massive token unlocks, bearish technicals, and weak momentum don't usually lead to quick recoveries. Be cautious, have a plan, and make sure you're watching how price reacts to each unlock day, because that's where the next moves are likely to come from. Let me know in the comments, are you still holding Pi? Do you think the project has long-term potential, or are you concerned about these unlocks and the price drop? I'd love to hear your thoughts. And if you found this video helpful, don't forget to hit that like button, subscribe for more Pi Network updates, and turn on notifications so you don't miss the next one. And let me know where you are watching from. Comment Pi Network to the moon. Thanks for watching, and I'll see you in the next video.